Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, March 10th. It's Alissa Coram here. While the action for the major indexes was muted, but wild swings in the oil market. And joining me now to add perspective on that and much more is my colleague, Ed Carson. Great to see you, Ed.
Great to see you, Ali. I want to take a look at ASML, GSK, and Cameco.
Okay, we'll take a look at those three stocks. But first, a look at the major indexes and, as mentioned, the oil market. So we'll start with a look at the NASDAQ composite today, essentially flat, just up a fraction coming off of intraday highs. And this after that explosive upside reversal right at the 200-day line in the prior session. Meanwhile, the S&P 500 down 0.2% on the day. So a downside reversal here at some of the shorter term moving averages. The Dow down less than 0.1%, and the Russell 2000 down about a 0.25%. The ETF tracking that small cap index, the IWM here. So a downside reversal there. So with this look at the major indexes, Ed, we are in a rally attempt. What are you seeing and what do you want to see from here?
Yeah, right now all the major indexes and the Russell are still below their 50-day lines. I want to see them get over there. I want to see us have more than 2 days up. I mean, we have these rally attempts, but we sort of limply, it's basically 1.5 days, or we can't seem to manage any kind of real consistency. So there's the danger we could have a follow through day. I mean, with a little different timing, we could have had a follow through day yesterday. Like if the good news came out a little earlier, maybe we would have had one, but it wouldn't have changed
Mm.
this chop. I mean, you can't really tell the Iran war from this chart because it's still the same thing. It's still the same up and down that makes it really difficult to do. So I'd like, again, I want to see lots of gains, is what it comes down to. It's one thing to tiptoe. I think people could have tried tiptoeing. Maybe they'll regret, maybe they're down on some of those tiptoeings today. But that's one reason why you tiptoe if you did anything, because there's just the danger. So if you tiptoe, if it's cold or too hot, bring those toes out again is what it comes down to.
Check the
Don't stay in
temperature
there.
of that water and if there are any sharks, all that good stuff, right, Ed?
Absolutely.
Okay, so that 50-day line, very important above us. And then below us, especially for the NASDAQ here, that 200-day line. We want to continue to see that level hold. And it does happen to coincide right around that low from the session on Monday. So
Yeah, and then in
level
those
to watch
lows, so the
there.
200-day line, it's close to the lows from like November. There's a lot. The Nasdaq, you can imagine if it breaks from
That,
there, would be really, really ugly. So we're a couple of days away from looking really good or looking bad, but that's where we've been for the past 4 months. We're a couple of days away, it always seems, and we never quite seem to get there either way.
yeah. Well, there, I think, were some interesting setups to your point. Maybe some folks decided to make pilot position type buys yesterday after leading stocks had pulled back and then started bouncing. But there is definitely added risk to doing that because we don't have a clear trend in the
Yeah,
market. So I will say that.
absolutely.
Okay, let's quickly look at the S&P 500 here, Ed, and talk about levels to discuss. You mentioned the 50-day line. Looks like there is a lot of trading around this 6,800 as well.
A lot of there and hit resistance at the 21-day line, and then I guess the 10-day line. So just even these short-term levels, just tough getting above.
hmm And we'll go to the small caps. What are you seeing here, Ed?
Yeah, this one had the biggest gain. This was up over 1%. So disappointing. That's why it gets so hard. You can get excited. Look at this. We're moving. And it did look really good from Monday's lows. And then again, it's just hard to sustain anything. And it's just hard to, how can you move in there when the moment there's even like a moment of strength, it seems like things are going to turn around. It just makes it so tough.
It does. Okay, well, the real drama over the last couple of trading days has really been in the oil market. And Ed, you were mentioning to me before the show, it's all a matter of the time frame that you're looking at, where these wild price swings leave us. So tell us more about what's going on.
Yeah, it's really tough because USO, which isn't an exact thing, but it sort of tracks oil prices, that shows an increase. But crude futures fell 11.9% today. So how could this be so far off? Well, that's because crude futures close at 2:30 Eastern. Well, after 2:30 Eastern on Monday, President Trump came out. So oil
Mm,
prices went from say $94, I'm trying to remember, down to about 86. Well, today we had prices and they closed down at 83.45, but they moved back up. There was weird stuff going on today. Energy Secretary Chris Wright, mistakenly said, "Hey, a tanker was
escorted.
escorted through the Strait of Hormuz," which is just a huge news. Oil fell down to almost $80, and then he deleted that tweet, and the White House said, "No, no, I guess that didn't happen." So, I mean, but yes, that makes a big difference, and I think that's one reason why the market had muted gains. You go, wait a second, how could oil have fallen this much and stocks went flat to down? It's because, well, from the perspective of the stock market, oil prices were up. And it also just shows you we could have enormous swings. I mean, we swung basically from $120 on Sunday night to $80 Tuesday afternoon. We'll just have to see. There's still talk about, and one reason why the oil prices have really come down is we can have some reserve release, from the US and other rich nations that could provide some temporary support. Obviously, if it's not fixed in a few days or weeks, that Strait of Hormuz closing will have some longer term impacts that really reserve releases can't band-aid at that point.
Mhm, mhm. And, which is why tracking the oil futures right now is so interesting, right? Because you can see perhaps, what, traders are speculating might be that
Yeah,
impact.
and one thing is that when we look at these prices, and I don't know where they are right now, but the future months, like if you look at October, November, December, they're not forecasting prices nearly as high as they've been showing. So the market still expect this to be temporary, that somehow, some way, that the oils will flow again. Now, the market's just hoping we'll see. I mean, we'll see. And so that's going to be something to watch. If those prices start coming up and they start like, that's a suggestion that they think is longer term, and that's going to be a bigger deal for not just the stock market, but for the global economy. But we're
Right.
not there yet.
Yeah. Okay. Thank you for that update, Ed. In terms of other sectors and themes with notable action today, what stood out to you? Any ETFs we should look at?
I think maybe SMH, uh, just that showed some strength. I think it came off highs. Yeah, it came off highs quite a bit, but definitely the SMH, there's AI plays. AI infrastructure was really an area of strength, especially early on. So yeah, this still is active pretty well. This is around the 50-day line. Nice to see if this come up. And honestly, this is one decent way to play SMH. I mean, to play chips. Great way to play SMH, but it's a good
Mhm.
way to play
Yeah.
chips with some things more extended or pretty out there, some things not quite in position.
Yeah. Right at a key level after undercutting a prior low. So you get that undercut, that turn, a retake of some moving averages. So we get whether it's the ETF or some of the individual leaders, we're definitely paying close attention to these setups as they develop. And we'll be taking a look at one in the group here soon. Let's take a look at GDX. We'll just run through a couple of these ETFs quickly here, Ed. Sort of similar. You had a pullback, new highs, now another pullback, and some support at that key 50-day.
Yeah, it's hard to know how to do this. I mean, there's all sorts of things that are moving with the dollar, with not. So around the 50-day line is probably a decent place to try to buy something like this, but it is very wild. It's not going to be safe. There's nothing really safe out there right now. I mean, that's just the
Mhm.
truth of it right now.
Yeah. Well, speaking of, let's just take a quick look at the volatility index, the VIX. It has come down a bit, but it is at elevated levels. So, this is one way of sort of looking at that elevated risk in the market, just the
Yeah.
volatility.
Yeah, and yeah, it wouldn't take much. We're already, as you say, elevated levels. So if fear returned, that could come up, which would be in some ways a positive thing, but it could obviously, that's short term. If you go to a weekly, you can see how it's still nowhere near where we were last April when we had the combination of DeepSeek and the tariffs.
Mm-hmm.
So that we could get a lot higher.
Yeah. Okay. We'll continue to monitor that. Just a couple more quick ETFs that we will look at. Then we'll look at the individual stocks. Here's a look at IGV, just an update on the software sector, which had been very hard hit, then started leading that short term relative strength line, spiking, seeing money flowing to this area. And then we talked about on IBD Live this morning the potential for short setups in this group. A lot of names in this area. CrowdStrike comes to mind. We'll have to see where it closed today, but it closed higher. But it's right at a key level where one potentially could, if you're into that sort of thing, go on the short side with that declining 50-day line after a prior uptrend, and then you get that rally up and then resistance at the 50-day. But it shows you that it's hard on the short side too, because this one closed in positive territory.
Yeah, and that thing is shorts are even more dangerous than longs in kind of these volatile markets because you can have these fear
Yes.
like the whipsaw so fast. So
Mhm.
even if you're right, so yeah, but there definitely were names like CrowdStrike and some of them that did come down that were around those levels. So definitely something to watch either way, because if they can punch higher again, that would be in some cases, would be a really positive sign. But yeah,
Yes.
software steam may have run out for a little bit.
We'll see. Okay. And then XBI, the biotech sector, we're monitoring that as well in a nice setup here, Ed.
Yeah, so that's bounced back a little bit and had a couple of days. So that actually bounced back on Friday. So a little bit of momentum. Yeah, it gave up gains, but yes, setting up pretty nicely.
And the industrials. We're tracking that as well. It's been one of the leading groups. Some recent turbulence, but support right where you'd like to see at the 50-day moving average. So this is something I think especially on a weekly chart, and it's early in the week, we still have 3 trading days left. That support at the 10-week line after a breakout going a couple months back, potentially a buying opportunity for some investors, that sort of setup. So we'll keep
Yeah,
that in mind.
absolutely.
Okay, well, let's take a look at ASML in the chip sector, pulling up a chart here. So speaking of a prior run up and then a pullback to the 50-day slash 10-week, that's exactly what we're seeing here, and a solid bounce the first 2 days of the week, Ed. So far looking pretty good, up 7% this week.
Yeah, and there's a number of chip equipment and memory plays that have been among basically the hottest stocks in the S&P 500 for the year, mostly because of January. But this one's still pretty close to that. I think this, I'm not even sure if it closed above its 10-week line. It's above its 50-day line. So you'd like it to at least be above its, so just below it. So I think you'd like to see this get above the 10-week line. On a daily chart, maybe get above its 21-day line. It was there intraday, but it's not too far from those levels. That's the thing. Some of the levels are already, some of these names are already 10, 15% above there, or even 20% above their 50-day line. And so it's like,
Right.
that's pretty hard to get excited, to do that in this kind of market. But this one's finding support at the 10-week line for 50-day for the first time since sort of its breakout, or even maybe the moves like in this area, yeah, since early in the year. So that would be a place where you could buy it. Again, I'd be careful. It's such a wild market. I wouldn't, there's a number of AI infrastructure plays. I certainly wouldn't buy them all. I mean, it just because of the risk
Mhm.
downside. But chip equipment, there's a lot of names that are really acting well. And so this is, if nothing else, people should definitely be watching this one closely.
Yes. Okay, let's go on over to GSK. This is in the medical sector and a similar setup.
Yeah, you don't have to be in tech, and it was something that, David Ryan, who makes that point on IVD Live, he's often looking, you can find growth elsewhere. He didn't name this one, but GSK, it's, the growth has picked up in the last few quarters. It's not amazing, don't get me wrong, but a little bit of a pickup. There was a strong run. Yeah, stock, it's pulled back a little bit, but to where you'd like it to find support. So this one, the relative strength line has improved for several weeks. I will admit that if you look on a monthly, it has been a
Mhm,
long, long road for this name. In
mhm.
fact, I think it's like a 17-year high or something, or like it just got above like a 17 or some kind of base that just have to go forever to get to.
Yeah.
But we are seeing, and the relative strength line, of course, has been terrible throughout because obviously the stock market has surged
Mhm.
over all that period. Just something to keep, so I don't want to but there are a lot of big name pharma names. Those have come up. Those have done well. There's
Mhm.
Merck, there's AstraZeneca, there's some other names out there. So this especially maybe, if it, finds support off the 50-day line or pauses here for a little while, might have another
Mhm.
opportunity, for investors.
Right. And I think this is one reason why I really like looking like you at that relative strength line on the various time frames. And I think it shows that it's important to know not only your personality as a trader, but the stock's personality. If you're a swing trader, maybe it's fine to see this relative strength line on the monthly. If you're just trying to get in and out quickly and looking at that shorter term relative strength, same with a position trader. But if this is something that you ideally, if you have a cushion, would like to hold for a longer term move, well, our historical analysis has shown that if you combine that strong relative strength with the solid fundamentals, that's going to increase your odds of something that you can hold and that will outperform, right? That's what we want to do as stock pickers. We want to outperform the broader market. So looking at that relative strength line in those different ways, I think can be helpful.
Absolutely.
Okay, let's go to CCJ, Cameco on the charts here. So we have been talking about, the uranium and the nuclear theme here. This is in that mining group, very strong group, a bit of a wild stock, as you
Yeah.
can see on this chart here. I mean, if you go from a 23% gain from the buy point all the way back down in just a couple of trading days, that's quite a round trip. But the current setup, I could see why investors would be, would find this compelling.
Yeah, I just want to see that the 50-day line seems to have been a safer spot. I think if you look on a weekly chart, there have been times that breakouts have worked. It's not impossible, but this one had a strong run in, around after the big drop in April, so it came up but most of these breakouts, like the last one, it did round trip ultimately. This last one, from an early entry, it did okay, but from, it did round trip, not terribly. The ascending base, it undercut. And yeah, there was a prior one, but then there was a number of failures before that
Mhm.
last year to scroll back. So it does feel like this is a stock that if you're going to buy it, buying it on near the 50-day line seems to be more in character of what might work. Not saying it will work, but that
Mhm.
it just
Yeah.
seems to be more likely to, and it provides a pretty safe look. If it, reverses go below the 50-day line, definitely should be looking to be, exiting that kind of position. But this is one way to play it. Again, this is also sort of in the AI space. So you can't buy
Mhm.
this uranium play and buy Nvidia and buy a heavy construction firm and call yourself diversified. You are not diversified in this AI world. So, just remember that when, there,
Mhm.
and only have so many high beta names. This is absolutely a pretty volatile stock, not crazy on a day-to-day basis, but certainly over a few days, you can have these big moves.
Mhm.
Definitely keep that in mind. But yeah, strong growth. There's a lot of excitement about nuclear, and this is sort of a picks and shovel play. No
Yeah.
matter how you see it going, it seems like uranium will be in demand, and they're going to be a big player in that.
Mhm. Yeah, may we never forget the impact of DeepSeek and what that taught us about AI diversification. So,
Yes,
still
yes,
scarred. Still
yes.
scarred, Ed. All right. Well, thanks so much.
Oh,
Really appreciate it. Oh, yes.
could we take a look at Oracle? Yeah, because this is important for the
Thank
AI
you.
infrastructure play. Yeah.
Thank you. You caught me. I was testing you. Oracle, let's go there. Earnings up 8%. So that's a positive initial reaction. We don't know if this overnight action will continue over the next minutes or hours, much less into the following session, but promising initial reaction here.
Yeah, they beat views. I think they raised their guidance for the next fiscal year. It'll be interesting to see, yeah, their commentary about financing on data centers, because a big concern is that can they finance all their data centers, and they're so
Mm,
concentrated in OpenAI and yada yada. So this is more important for the AI build out than for software names. But so this was really a positive. And I guess I'll also add, in addition to Oracle, next week we'll also get NVIDIA CEO at the GTC conference. We'll also get Micron earnings. So Oracle was one of 3 things that are happening over the next week, and again, as you say, we're just a few minutes into the Oracle after hours. We don't know where
Right.
that'll go, but very important. So all this stuff about, "Oh, AI infrastructure did well," there's a lot of news beyond all the Iran war headlines
Mhm.
out there, but yes, this is positive, a positive sign for AI, all those things out there. We'll just have to see how that goes.
Mhm. And also just emphasizing that this stock is badly beaten down, right?
Oh,
It's in
yeah,
a
this
it's
one,
in a
yeah.
downtrend. So while we might potentially get a little excited about what this says about that AI build out, doesn't mean that we're buyers here of this type of
Yeah,
setup.
I think this is important for the rest of the market, but yeah, Oracle does not seem like it's in anywhere near position. That's a really good point to make.
Yeah. Well, never hurts to emphasize those things.
Absolutely.
All right. Thank you, Ed, for calling that out, for calling me out.
Thank you,
Good
Ellie.
stuff. All right. We'll see you next time, Ed. Thanks, everyone, for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. Looking forward to seeing you there 10 minutes before the opening bell. Investors.com/IBD Live for all the details. We'll see you there, and then we'll see you right back here tomorrow after the close.